Bitcoin's very powerful. It's all becoming powerful. So many people now, they want to pay you in crypto. They want to pay you in Bitcoin. And we have to be at the top of it.
So it has been a rough year for Strategy. The stock is down nearly 50% year to date. And the company that built its identity around aggressive Bitcoin buying is now pivoting to something that it's never prioritized before: cash. So this week, Strategy disclosed that it's grown its U.S. dollar reserve to $2.2 billion, selling shares to fund it, specifically to cover preferred dividends and debt interest. Now, that reserve didn't exist a month ago. And what's also notable here is what they didn't do in that same window of time. They did not buy Bitcoin. And historically, when prices dip, the company adds to its Bitcoin stake. But this time, they chose liquidity. Strategy holds more than 671,000 Bitcoin at an average acquisition cost of roughly $75,000, according to its latest filing. Now, with Bitcoin near $89,000 today, there's still a cushion, but it's a lot thinner than it used to be. And their Bitcoin yield, that actually went negative this quarter. Now, the overhang here is January 15th. MSCI is deciding whether to kick Strategy out of its indexes, arguing that these digital asset treasury companies look more like investment funds than operating businesses. JP Morgan estimates that index exclusion could trigger about $2.8 billion in passive outflows and up to almost $9 billion if other index providers follow suit. Strategy chairman Michael Saylor pushed back on X, saying that the company is not a fund, and pointed to their software business and the billions in digital credit securities they've issued this year, but the market is not buying it. The premium investors used to pay for Strategy shares has largely evaporated. So bottom line here, Strategy has gone from Bitcoin's most aggressive buyer to a company that is managing liquidity and now waiting to see if it still belongs in the indexes that helped make it a household name. Crypto-pegged equities are moving higher as Bitcoin pushes past $94,000, with traders betting the shakeup in Venezuela could actually be good news for risk assets. Now, the bull case is macro. If President Trump makes good on his promise to ramp Venezuelan oil production, that means more supply, cheaper energy, and less inflation pressure. And that is a green light for assets like crypto that tend to do better when financial conditions loosen. It's a complete reversal from last summer's Iran strikes, when crude supply fears hit risk appetite and sent Bitcoin lower. But there's a second catalyst getting attention as well. Reports suggest Venezuela may have quietly amassed a Bitcoin reserve worth tens of billions of dollars. None of that is confirmed, but if the U.S. seizes those coins and adds them to its own strategic reserve, you're looking at potentially a substantial supply of BTC getting locked up for years. That is the kind of narrative that crypto traders love to move on. And technicals are also helping here. Bitcoin is back above its 50-day moving average for the first time since that major October washout. That move forced shorts to cover into the rally. The option